Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market with all eyes on the FOMC tomorrow at 2 p.m. Eastern. It was a day for day trading commodities, with oil probably the most volatile the last 2 days that I've ever seen. And we had anticipated tightening ranges in the market, not a whole lot going on with gold, silver, and regular equities, as we are anticipating everybody pretty much just waiting for tomorrow. So SPY gave us a real tight range, less than $1 volatility, and a daily inside bar. And actually it did end up being more than $1 volatility with the end of the day bull move and strong close. So that was notable. Volume not notable. Essentially, we're heading into the FOMC with the bulls having a nice market cushion. And I know there's a lot of fundamental bearish talk out there, and I know that that is always going to be the case. But for me, technically speaking, I have a line in the sand. And if we're holding the August lows, I'm bullish. It's that simple. I am bullish the S&P 500 in individual stocks as long as the August lows hold. So if we have a bearish reaction tomorrow in the markets to the FOMC, as long as we don't pull back more than 6%, we're looking for a weekly higher low to form. So even if we double top at the all-time high, hold that August low, and the bulls still have the weekly uptrend in their favor. We haven't even lost the weekly uptrend with any of the weakness we've seen in the last 6 months. So that's where I stand big picture. The bulls are positioned well, where if it's a bullish reaction, daily bull flag to new all-time high will be confirmed, and the S&P 500 should get its all-time high. Remember, SPY hit its all-time high already. It has a dividend distribution on Friday, which is going to drop the price of SPY back down, and SPX will have to watch in the short term for the true levels. So bottom line, bulls comfortable, even with the bearish reaction, not likely to break the August lows in the near term. And we'll see what that reaction is. IWM on the daily chart, bull flag as well. This is a potential cup and handle pattern. The number one thing about cup and handle patterns is it's probably the most misdiagnosed pattern I get with people asking me questions. The right side has to be lower than the left side. It shows an inability to break resistance, healthy consolidation where some people take profit, and the bulls that miss the run buy the dip in a bull flag pattern, and then they go for continuation. So the setup is there where if it's a bullish reaction, cup and handle pattern, if we can break 159.23, that will confirm on IWM for follow through. And XLF is similar as well. XLF, 28.72 resistance. We rejected by 12 cents. Daily bull flag and trying to see continuation. Very brief consolidation. The financial sector is certainly comfortable heading into the FOMC with the lack of profit taking. We did see a bit of profit taking yesterday with a gap down open, but bulls bought that dip. So there's not much profit taking in the financial sector right now, and everything is holding up well heading into the FOMC. Tech sector, daily higher low is now established at 191.11, and if we were going to see a bearish reaction here, then we have a head and shoulders setup. This is the 4-hour time frame where we have our left shoulder, head, and this would be the right shoulder. If we can't break 194.71 and we roll back over and break 190.55, we would lose the daily uptrend. When we lose the daily uptrend on anybody, we zoom out and we look for a weekly higher low. And as long as QQQ can hold its low of August dump, it's a weekly higher low. So lose the daily uptrend, zoom out to the weekly, and look at the August lows. XLV, daily higher low established at 90.90, keeping the bulls in control. Resistance is 92.38 to try and see continuation. XBI, daily inside bar, fairly tight range. Bulls still haven't broken the high of the initial bounce attempt in August, so the bulls would like a bit more follow through to be comfortable here. Our daily higher low is 81.81, and resistance is 84.12 and 85, 84.12, 84.63, and 85.03. So everybody's established daily higher lows at this point, or most everybody. SPY is not convincing just yet because of the inside bar today, but again, the takeaway from the chart setups heading into tomorrow is bulls are comfortable and confident, and even if it's a bearish reaction, they have space to work with to consolidate. The VIX dropping back down. So we're looking down at 1350 and 1530. And we're going to have to see a break of 1530 in order to see any kind of upside action in the volatility sector. Nice trend line for support to be watching. Let's see if this is a falling wedge. Remember what happened last time we had a falling wedge in volatility here? I'd like to put the trend line there, but that would leave out this close. So something along those lines. But the bottom line is, last time we had this falling wedge, right before the FOMC, and it wasn't the FOMC that led to this rocket ship, it was the escalation of the trade war right after the FOMC. So it's somewhat similar. This one was more long and drawn out, and then there were more examples of lower lows with a lack of follow-through, but it's fairly similar. So certainly something to be watching. Gold is, I'm liking it. It's a nice tight range, but I'm liking it on the 10-hour time frame. And I go through and find the time frames where things are most clear. I've never used a 10-hour chart before, but I can see clearly that we are in a tightening range, and I used this chart this morning to say that gold is likely to set a lower high compared to 1512 and stay in this tightening range into the FOMC. So we have the high, low, the pullback, lower high, higher low, and it does look like our lower high is being set. So it's just a very clear tightening range that's waiting on the catalyst to give us a break. If it's a bull break, 1524 resistance. If it's a bear break, 1583 and 1483 and 1485 supports. And it's pretty much going to dictate whether our weekly higher lows are set on precious metals or not. Bear reaction, and they have not been set. And we're going to look at the weekly exponential support. And if it's a bull reaction, then they have been set, and we're looking back up to the recent highs. Silver, a little bit stronger than gold today. It had a 4-hour trend change, so it's not as contained in a tightening range, but the weekly time frame is the same thing. Bullish reaction, and our weekly higher low is set. Bearish reaction, and we'll be looking back down at our recent lows. Oil volatility was off the charts. I traded oil multiple times today. Ended up with a 4-day maker on oil. Two different trades and two day makers. So we had a daily inside bar. We pulled back. There was a bear reaction first thing this morning. We were watching an equilibrium heading into the open. We had the high. The low of the pullback was 61.41. A lower high at 62.55. And as soon as we broke 61.41, that bear break followed through. News releases came out today that impacted short-term action. But honestly, I didn't really read much as far as new headlines. They were talking about Saudi Arabia getting oil production back online and how it wasn't nearly as bad as everybody was talking about. I've been reading those articles, headlines for 2 days now. But either way, the market was reacting to them today. So I made a trade on the first dump and oversold bounce right here. And that little bull flag, when you're trading these 3 times leveraged ETFs, that little bull flag is enough for a significant gainer. And just doing the math real quick, it was, I ended up with a 1.5% gain on UWT on this move. Just 2 scale-in entry orders, scaled out into strength, back to all cash as we dropped down because we could tell it was a 5-minute bear flag. How could we tell it was a 5-minute bear flag? The 2-minute trend changed and saw no follow-through. A trend change with no follow-through means zoom out and look for a flag. We had our low, high of the bounce, higher low. We broke resistance by 4 pennies straight into consolidation. That is not a convincing trend change. That told me 5-minute bear flag is most likely. From there, I said, all right, I got a 2-day maker, and I can be very comfortable on the day. I can be very patient, and I don't have to make another trade, and I've got a 2-day maker. So that makes it so I'm very patient, essentially. And I then was back looking at oil and saying, okay, well, the half-hour RSI is still crushed down in the 20 range, almost the teens. So I know we're due for a bounce there. The hourly RSI is just getting oversold, so I'm still interested. And I pulled up this chart on the daily time frame and said, okay, where's support now? And as soon as I saw this, I said, I'm making an entry again. 58.79, 58.74, a double top of previous resistance, and we were right there for support, testing that level. And again, the half-hour RSI was 20, testing previous resistance, now support. We bounced right off that level. I got another great entry. I exited and left a lot of money on the table, but it was the kind of thing where I had another 2-day maker real quick, locked in that 2-day maker, and then I had to run an errand and I left the computer. So had I stayed in, it could have been a 4 or 5-day maker, but it's the kind of thing where, again, I know there's going to be another opportunity tomorrow. Am I going to sit at the computer 10 hours every day, or am I going to go about life and balance things out? And today was another example where I chose to balance things out, and it might have cost me some money, but in the long run, staying sane is important. So where we stand from here on oil, daily inside bar, and we're now into some gap fill territory from the open. Bulls trying to hold that level. I'm watching the hourly downtrend. Anything under 60, 70 is just an hourly lower high. And the bulls will have to change the 4-hour trend back in their favor to indicate a daily higher low has been established. We have the oil inventory report tomorrow. Why is the oil inventory report important tomorrow? It's going to be more volatile than usual because of the last 2 days. So just be cautious. I personally will have zero position heading into the inventory report, as that's going to be a gamble. And I'm not here to gamble. I'm here to trade when the odds are in my favor. So I wait for earnings reports. I wait for inventory reports. I wait for FOMC reactions, and I trade after that. Natural gas. Hourly equilibrium is beautiful right now. It's a potential bearish reversal candlestick on the daily, but the hourly chart is in a nice tightening range where we had our high, low of the dump, lower high, and now we're scouting a higher low. Bulls want to hold 2656 and make their way back up to 260, upper 260s. And breaking this hourly equilibrium is going to dictate whether we are looking for another daily higher low to try and form, or if the bulls still have strength for continuation. So that's where we stand heading into tomorrow. We'll see what the FOMC brings. Again, if I had a long-term portfolio, which I don't because I don't trust the government and I don't trust our financial institutions, but if I did, I would be hedging that right now with a little bit of protection in case we saw a bearish reaction. And other than that, we'll see what tomorrow brings. And I'll see you then. Have a good rest of your day.